Now, some oil marketing companies have cut prices of petroleum products at the pumps from the 1st of January this year. This is the second consecutive time fuel prices are going down in a few months. Now, one of the major players, Star Oil, took the lead by selling a litre of petrol at 11 cedis 24 pesos from the previous price of 12 cedis 69 pesos per litre. Similarly, it is also selling a litre of diesel for 11 cedis 24 pesos from the earlier 11 cedis 69 pesos. The other major OMCs are also expected to adjust their prices downwards in the coming days. Some of the oil marketing companies have indicated that the reduction was influenced by the cedi stability in the last 2 weeks and the continued reduction in prices of finished petroleum products on the international market. So what does this mean for the consumer? Joining us on Zoom is Executive Secretary of the Chamber of Petroleum Consumers, Duncan Amwa. He has some reactions. He actually joins us on phone. Good morning to you. Happy New Year, Duncan. This must be good news to start the year with, or is it too early to be jubilant?
Well, Happy New Year to you, to workers of JoyNews, and Ghanaians in general. I would concede that this is clearly a good way to start the year. But if one is also minded by the petroleum pricing curve history or development, usually in January prices do cool off globally because most of the people who did go on vacations in December would have returned, and aviation systems will probably cool off equally. Industry is also likely to cool off from the ramped up numbers that they would have produced for the Ulitide. So the demand for petroleum products globally in January, February is likely to be lower than you would have witnessed for the last quarter of the preceding year. And so it is expected that the trend would naturally be that for this first quarter 2024, prices are likely to be a bit easier on our pockets. But let me also take this opportunity to say that Star Oil probably would need to be studied in our institutions, because we did a simulation with the numbers that they currently have on the market. And it looks as though all their margins will have to go. Every single little profit that they would have had to make would have to go in order to be able to arrive at the current 11.2.4 prices that they are quoting. And that for us, well, as consumers, we are excited. It should be the way for other oil marketing companies to go. But I'm afraid I'm not too sure all the others will be able to descend into the 11 region as Star Oil has been able to offer their customers for the first week in January. They need to be commended heavily, and a few other oil marketing companies that are equally price sensitive to the Ghanaian. It's a school fees month, so if anything to help you save, I'm sure our consumers will be excited by it. And Star Oil has taken the lead, like you rightly mentioned.
All right, so you say that in the coming weeks, at least in the next couple of months, we'll see prices fairly stable. And that's pretty normal because it's the beginning of the year. But what's your forecast for the rest of the year? Are we going to see the kind of hype we saw last year, compelling government to go for oil and all that?
Well, the geopolitical developments, you could only probably be firm after the first quarter. If the tensions within the Middle East between Israel and the Palestinians were to ease, if the Middle Eastern region was to cool off a little bit, it is likely that 2024 could see much better fuel prices, especially for consumers, than it could be the previous years. Again, let me also point to the fact that investments in hydrocarbon exploration declined. If you look at 2021, 2022, due to the new discussions on green, the evolution, right? But as I speak with you, a lot of that investment is coming back into the hydrocarbon space. And what that means is that we are going to have new and additional wells coming up this year, which is likely going to add to the global production numbers. Once that is done, it's possible we could see some stability in prices, unless, of course, there's a certain wild card across board. There's certain geopolitical development that forces the major exporters to cut back on numbers. If that doesn't happen, I'm quite certain that 2024 could be quite stable as far as petroleum pricing globally is concerned.
It's interesting you bring up the geopolitical tensions. I mean, at least we've heard Israel say that they're going to carry through the war, continue with the war throughout 2024. We also need to keep an eye on the cedi and how it performs, because it also has its role to play in pricing of fuel. So what can the government do right now? What can the sector players do so that we have a relatively stable price throughout the year?
Well, very good question. I always advise and maintain that institutions like the bulk oil storage and transportation need to take advantage of seasons as these, where you have international market prices dropping around 600. Within the year, it goes as high as 900 to 1,000, 1,200. If I had the opportunity stock up now, while prices are friendly, the possibility of you cashing out maybe after March is high, and boss could probably make some good money if they did. But again, the question of what funds they would also use to hold the stock for the extended period, so that when prices or the price curve was to turn the other way and prices were to start going up, they could ease products onto the market. So it will bring you back to the issue of, the strategic stock margin or account. If there's some funds that governments can advance to them, I'm sure they can hold enough stock now, so that even if you woke up tomorrow and Israel has ramped up their activities within the Middle Eastern bloc, and OPEC is also cutting back on numbers, and the geopolitical development look as though prices would have to go up, both would have had enough in tank in order to be able to cushion the market at least for some weeks. But as it stands, it looks as though we'll rather be interested in more in buying and selling on the spot. So whatever prices we get this week, we buy and then we put on the market. If next week prices come and they are high or bullish, we also buy and let consumers pay for that. That way, we don't derive the full benefits that boss should have given all Ghanaians. So we would advise that they stock up around such times when prices are friendly globally.
All right. Thank you so much, Duncan Amwa, Executive Secretary of COPEC. I appreciate your time with us.